Hello, I'm David Penn, Research Analyst for the Finovate Group. Thank you for joining us for our latest Finovate webinar, How Next-Generation Data Protection Accelerates Financial Institutions' Innovation Cycles. Today we'll hear from Lou Senko of Q2 and Doug Wick from ALTR as they explore how a large, publicly traded financial experience company is using innovative solutions to provide the ultimate failsafe to its consumers. We'll also investigate best practices for keeping sensitive financial data safe, how to gain transparent visibility and control over your data, and how blockchain technology can support the restoration of digital trust. Please know that both Doug and Doug are going to be presenting on stage at Finovate Fall next month in New York, September 23rd to the 25th. So if you're at the event, make sure to check them out on stage, as well as stop by their booth at the event and say hello. Again, that's September 23rd to the 25th. More information about Finovate Fall is available at the Finovate website. And just a quick reminder before we get started on our presentation today, this is an interactive presentation, so please feel free to share your questions with us. Just use the Ask a Question button at the bottom of your screen, and we'll get to your questions at the end of our session. So with that, let's go ahead and get started. Lou and Doug, go ahead and take it away.
Thank you very much, David. We appreciate everyone being here to listen to and watch the content from Lou and I. My name is Doug Wick. I'm the VP of Product and Marketing at ALTR. ALTR is a data security and governance platform and software company. We're focused on programmable data security that gets embedded directly into applications and is fueled by innovative technologies like private blockchain. And we'll get into more of that later. Myself, I have a long history and track record of startup software companies focused on the enterprise. And taking some of these innovations to market. For the webinar today, what we're going to do is, Lou, I'm going to hand it over to Lou in a second. Lou's going to walk you through some slides, about 20 minutes of slides, and then after that, I've got some questions for Lou. I'm sure I'll probably think of a couple more while I'm watching his presentation. He and I will have a little bit of a conversation, and then we will open it up to questions from the audience. So we'll look forward to that. So thanks again for joining us. Lou, go ahead and take it away. Please introduce yourself and maybe say a little bit about how Q2 and ALTR are working together. Thank you.
Sure. Thank you, Doug. Good morning. I'm Lou Senko. I'm CIO here at Q2, and we're a financial experience company most known for hosting about 420 financial institutions, about 15 million users. So we provide the services to take those experiences out. I've been with Q2 for about 6 years now, seeing a tremendous amount of growth. We're going to walk you through our security landscape and then how we have partnered with ALTR to provide some underpinnings across our product portfolio to provide kind of the next generation, innovative, disruptive security posture. Last year, there was over 100 major data breaches. Major as in material to the business. They had to report the breach to their customers and to the board. When you look at this list, there's lots of capable companies with lots of capable staff and lots of capable technology. Many of them with budgets much, much larger than ours. It's terrifying, really. That's a breach every 70 hours. There's likely going to be another one before the end of the week. And what really matters to us, is that our customers are among the top 2 targets, financial services and healthcare. And because of that, they have the money and they have the data. So we've been thinking a lot about this. And it may seem a little oxymoronic, but the best way to secure that data is to make sure you don't have that data. And more on that in a bit. Good morning. As part of CIO here with Q2, I'm responsible to deliver Q2's hosting experiences through our hosting environments. And it's my awesome teams that have to deal with operational things like security, availability, performance, and quality. Over the next 20 minutes, we'll first talk about, what you need to know about the threat, what is the state of the industry, and then take away some ideas that you can bring back to your teams around, what we're doing to prevent this. So first of all, let's look at the emerging security landscape. Analysis of those 100 breaches last year, over half of them were some sort of attack or some bad actor. At least the other half, human error and system glitch, we can do something about. But to be clear, this is state-sponsored cyber terrorism, right? There are 6,000 people that go to work every day in North Korea, working for the government, get a paycheck from the government, and they're focused on hacking state infrastructure, banks, and defense technology all across the world. They are funding their own country's economy with this illegal activity. In fact, 8 of those largest takedowns last year netted them over $1 billion. That's $1 billion out of the pockets of our customers. And so, who's the target? Well, who's got the money, right? And it's our customers, and therefore we are. And as a target, the financial sector is only second to healthcare. And these attacks are sophisticated, okay? It's no longer kind of the smash and grab where I break the window and there's glass everywhere and they just grab the first thing on the shelf and I run. This is not an angry 17-year-old sitting in mom's basement. On average, it takes over 100 days to even know that you're leaking data. And then once you find out that you are, it takes you another 30 days to find out where it is and how to stop it. Our customers have a 28% chance of a breach over the next 24 months, being in the financial services in the U.S. One of the regulating bodies of the financial industry here in the U.S., the Office of the Comptroller, so the OCC, just published their industry risk perspective. They do this every year. It's a big, long document. I'll try to summarize it here. As you can see, they break it into these 5 buckets up on my screen. But in short, their risk perspective is successive growth, incremental easing of underwriting, risk layering, and the building of credit concentration is making us numb to the eventual cyclical nature of a downturn in the economy. So there's risk in our loan portfolios. A change in an increasing complex environment trying to deliver services and a persistent cybersecurity threat is creating innovation cycles that put data at risk. We're having to go faster with partners. The expected increase in merger and acquisition activity in the industry, is not well planned and not well executed, and therefore it causes risk. And then the operational disruption underscores the need for tighter and more effective change management, as the operational resilience when implementing these new products and services while maintaining operations is outstripping the capabilities of the financial institutions. So in short, we're having to build more complex solutions, we're having to go faster, we're having to handle more data, and therefore we're putting that data at risk. So let's take a quick view of the security industry. So security budgets are forecasted to grow about 20% over the next 2 years. I'll tell you that's not enough. A third of customers are dealing with business silos that are making it hard to execute an overall security strategy because the budget and the resources are within the silos. 40% are struggling to evaluate the many solutions from the many vendors out in the space. Again, over half of them are having trouble finding the solution they want that fits within the budget they have. And then they're, of course, worried about outgrowing the current solutions they have in place today. 2/3 are having trouble finding qualified security staff. I'm based here in Austin. We have an incredible tech community. I have access to a lot of staff, but our current unemployment rate in the technology industry is 0.7%. And in the security field, it's actually negative unemployment. So we have more openings than we have qualified people for those roles. 3/4 know that their security team's under tremendous pressure to keep pace with the development and marketing teams. And then over 60% believe that the security team is actually slowing things down. And I tell you, the other 40% have probably just found a way around it. So leaning on your partnerships are really, one of the only answers you have. And for example, at Q2, we have to protect 50 million users, over $1 trillion of money movement, with connections to over 420 financial institutions. And at that responsibility, I spend at a level that no single one of my customers can maintain. And so my team has to be thought leaders across 420 very capable customers with very capable security staff. And hopefully the solutions I bring to them allows them to kind of punch above their weight class. So let's talk about some of the things we're doing at Q2 here that may be interesting to you and you can take back to your teams. So here's the challenge. One large FinTech, they've made thousands of small dollar, $3,000 loans, literally thousands of them. They watch their users through their online app and then automatically make a decision, a risk-based decision, to offer a loan to them. That's it. There's no credit check. There's no application. The user simply hit with a push notification saying, hey, based on being our customer, we'd like to make this offer of an instant $3,000 loan. And if you push the button, the money's in your bank account in 15 minutes. And then they just take a little bit off every transaction that comes through for the next little bit until the loan's paid off. Talk about low friction. This is exactly what the OCC was worried about earlier in my presentation. Okay, this large FinTech is using both volume and kind of targeting to really reduce their risk. And as they do, they lower the risk threshold for the entire industry. You either going to chase them down there, or you're just going to ignore it and let them have that part of the market. Will they be in business in 2 years? Who knows? But they're really going to put pressure on that market while they try. People today, they come home, sit on their couch, it's 10 o'clock Sunday night, the dust is settling from the weekend, kids are in bed, and now they turn to their personal life and they start Googling, loans. They find a website they like, they open an account, and they expect to get a credit decision within minutes. This is all 10:15 on a Sunday night. So how can our customers compete? And often, the more secure you get and the less risk you expose, the more friction you've added to the process, and that's a big no-no. So our customers have to move faster, get more nimble, and they do this by securing that data and then putting the pedal down on innovation. So the best way to keep the data safe is to not have the data and assume the network is in breach. What do I mean by that? Assume the network is in breach. Well, assume that the bad guys are already in the house. And I use this kind of cookie analogy, right? You folks, most of you can go grocery shopping, you bring home some cookies from the store, you put them on the counter, eat a few, you leave them on the table, you eat a few. Some of you may even put them on a plate and display them, right? Me, I live with a 3-year-old who's a professional cookie thief. So I have a professional thief in the house. So when mom brings home cookies, we have to act very differently. We have to know where those cookies are, we have to watch them at all times, and we have to protect them. Because the first time we turn our backs, they're gone, and I can't get them back. So enters Q2's trust view. So if data is kind of at the core of our customer business, then blockchain is really the core technology in TrustView that protects that data. Now, blockchain, everyone's heard of it. It's certainly trendy right now. But what is it really, and how are we using this amazing technology to really help improve our security posture? Blockchain became famous as the immutable public ledger underneath Bitcoin. And it really tracked Bitcoin moving from A to B to C. Is there going to be a public ledger system coming for the financial industry? I hope so. When? I have no idea, right? Our use case is very different. We are using blockchain to power and transform our security posture. So if you think about the average business, right? Who has direct access to the money? Who can take out from petty cash? Who can write a check? Who's authorized on the bank accounts, right? Usually that's very few people, and it's very controlled. Encryption, but who has access to the data there? And it's a lot of people. Encryption's been security's answer for this for a long time. But encrypting the data still means that the source data is there. You just covered it in math. You made it hard to read. And so if you think about in a breach scenario where someone takes that data, they have the source data. They just can't read it at the point. Now, encryption is really good, and it's really, really strong today. Now, I said that 10 years ago. Encryption was good 10 years ago. Today, I can crack that with my cell phone. So the problem is, once the source data is out in the wild, even if they can't read it today, eventually they'll get to it. So we got to do something better than that. Encryption is just not enough. So kind of under that lens, the way we use blockchain is very similar to the way a financial institution protects their customers' money. They provide a view to a selected group of people into the account, and they provide all the money movement flowing in and out of that account. They have a valve that can kind of control, even though you have access to the account, you can't drain it. So think of ATM limits, think of wire limits. So even though you have access to the money, you can't take it to zero all at once. And then, of course, they're financial institutions, so they have a vault where they can protect and keep that money safe. So view, valve, and vault. So the momentum's building around blockchain. In 2017, it was Gartner's most searched term. In 2018, it became one of the top 10 strategic trends. In 2019, it's CEOs like myself should be planning to do something with it. Now, as it promises to kind of reshape this industry, the data shows that in about 3 years, 10% of businesses will be doing something with it. So the use cases are still being fleshed out. Now, 5 years after that, it's going to be a $400 billion business. And then a couple years after that, it's going to be a $3 trillion business. So we're at the very early stages of this incredible adoption hockey stick. So let's get a little more technical here. Peeking at the actual technology, there are 3 parts: a smart driver, the brains, and then the blockchain itself. The smart driver sits between the application and the database, where it can intercept the live data stream. So it intercepts the data that we've identified as the valuable data that we need to protect. It takes that out of the data stream, it encodes it, passes it over to the brain, replaces it with a token, and then that token's what's inserted back into the database. That token doesn't reference the data, it doesn't reference where the data is stored, it simply is a referential token that the brain uses. Okay, that data then is forwarded on to the brain. The brain says, hey, I've got new data coming, so the first thing it does is it encodes it again for the second time. It then does a reverse fragmentation of that data, breaks it up into little bits, and then forwards it onto the blockchain. The blockchain then says, hey, I've got new data coming, and it encodes it yet a third time, and then scatters it across multiple blockchains. This encoding uses a different encoding scheme that's not statically defined anywhere. Okay, there's no key to steal to reverse engineer this. It's done real time in memory. So it randomizes the order of the encoding, and it randomizes the padding used. It tucks that in, and then the next block of data, it does it all over again, randomizes it all over again. So even if you get hold of the source code for the product, you can't reverse engineer it. You can understand how we encode it. Again, this is all done randomly at runtime. Okay. Just a little reminder of some blockchain fundamentals. Each block contains kind of the digital hash, so the fingerprint of the data, right? It contains a timestamp of when that data was inserted, and then it contains a hash linking it back to the previous block. Okay? The previous block then links the previous blocks together, so you never know how many links you have in front of you. All you know is what's behind you. And as the complexity of that chain grows, it just adds to the security of the block overall. So if you get in there and steal a block, and even if you could somehow read the data, all you know is what the block is before it. You don't know how to go ahead. Any change to the blockchain requires a majority, and so 51% of the nodes have to agree on the change, or it's reversed out. And it makes it very tamper-proof and tamper-evident if something should happen. Our blockchain has no external access. There's no public API. You know, it's not a public ledger. Again, it's a security secrets database. So this means the only thing that can interact with it is a secure connection point-to-point with the brain. So to implement this technology, we've chosen our partner ALTR. They were formed in 2014, spent a couple of years developing the technology, and launched officially last year. They're experts in low latency, big dollar, high velocity systems coming from the financial trading industry. They have 17 domestic and international patents already granted towards this technology. And they're based right here in Austin, Texas, so that kind of automatically makes them cool. From the ALTR stack, ALTR's been granted Service Level Provider 1 PCI DSS certification. So if you know anything about PCI, it means you can interact with credit cards, but you typically have to prove you don't keep any of that credit card information. Because the data is transformed into new data, ALTR does not keep any of that original data. And so they were actually able to keep the credit card data and still earn PCI certification. You know, they break their product offering into 3 parts: a monitoring part that provides kind of the view into all the data access, who touched what and when; govern, which works on alerting and controlling that access; and then protect, which is the encoding and replacing with token part of it. So again, monitor, govern, and protect. If I could leave you with the last thought here, there will likely be another major data breach this week, every 70 hours. Let me turn it back over for questions.
Lou, thanks a lot. That was great, and appreciate you walking us through all of that. I think it really kind of sets the tone for kind of where things are, where things are going, and kind of how to solve problems. And obviously appreciate you mentioning ALTR the way you did. I've got a few questions for you. I'll jump in and take first bite if you don't mind, and then we'll turn it over to the audience. But I think that you touched on this in your talk, but I know that Q2 has a multi-layered approach to security, right? To use your cookie thief analogy, you've got lots of things you're doing to keep the cookie thief out of the house, even though you assume that he's in the house. And then there's lots of other technologies you use. What do you think what's important about this layer in terms of what's unique about Q2 TrustView? What business value does it provide for your customers that's unique?
Sure. It's a great question. You know, when we look at security, it's, you know, the layers of defense, and so it's people, it's process, and it's technology. And I have a lot of control over the people, and I have a lot of control over the process, and we use lots of different certifications, and you know, we're audited 6 times a year for different things. And so we know that our processes are about as good as they can be in the industry. The technology piece, though, is always the tricky part, because we're innovating as fast as we can. We're bolting on the next new thing. Often it's innovative and disruptive, and it's new, and so the level of expertise we have is always developing and maturing. By using ALTR in the back end to take all the data elements that are special and sacred, and protecting them in this blockchain format, gives us an added sense of security that even if we don't understand, even if we have an exposure, a new thing, a new 0 day is found, and a brand new hole into our infrastructure is discovered, our data is safe. And that gives us a lot of confidence to operate in kind of this innovative, disruptive mode, where if we were always concerned about what we're exposing and how we're exposing it, and can we really operate this new technology in the way that it needs to be operated, we would have to be a lot more careful. We'd have to second guess ourselves. We'd have to add layers and layers of pressure testing to this just to make sure we're comfortable and responsible. Having it replaced by tokens in the database and having it tucked away under a blockchain that's impenetrable and immutable, that gives us a lot of security that even though we do all these other things well, if there's something that comes up in the future, we're still protected.
Right, that makes sense. So it does feel like in a lot of cases, in a lot of ways, some of these security products can be kind of reactive and dependent on known threats and threat intelligence around things that we know about. It makes sense the fact that to try to secure against things that we don't know about yet. Interesting. Okay, so another question. So I mean, just 10 to 15 years, I think it's really interesting that Q2 has taken such a proactive approach to security, right, as a software company. And, you know, 10 to 15 years ago, you know, not Q2, but certainly software companies were focused on speed and performance and you know, really focused on innovation, as you mentioned. And they would sell software to companies, and then the burden of security really fell to those companies a lot of times, right? To come in after the fact and apply security products to applications that were already functioning. What do you think has changed? What do you know, why, you know, what's changed in the environment that you feel the responsibility to provide, you know, to take the mantle of security in ways that maybe, you know, some legacy software providers wouldn't or couldn't?
Sure. Again, great question. You know, Q2's been around for 15, 16 years, and we too used to sell an on-premise piece of software. And so we sell the customer the software, give them some instructions so they could operate it, and away they go. The security, the availability, the performance, the quality, that was all on them. But what we found is our customers, their job was to operate a financial institution. And so putting this burden on trying to run a best-of-class technology suite at the rate we wanted to innovate really held us back and put them in an unfair position. If you think about, we like to choose the best technology for the use case that we're trying to solve for. And so we keep an open mind. We don't have any sort of sunk cost belief. And so if a new technology is out and it solves a particular use case for us, we'd like to adopt that. What that means, though, is over the last 7 or 8 years, I've got 7 different database technologies. I have Cassandra for this, I have Postgres for that, I have MongoDB for this, and I use SQL for that. And so I have the burden to be able to operate all this stuff at scale with the uptime and availability and performance and quality that my customers expect. And more importantly, I have to secure it, because obviously this contains customer data. So if you think about how we then moved away from this on-premise model and trying to put the burden on the customer, we've moved it into this hosting model where then at my spend level, and it's my job to be best in class at operating this stuff, I can bring the best technologies to bear for that customer, and again, allow them to punch above their weight class. And so ALTR is just, again, one more of those things that blockchain is still fairly new to the industry. There's still lots of ways to operate this, but you have to embed it in the application itself, so the driver sits as part of that application stack. And so we can move, instead of trying to add security to the finished product, we've actually worked our way with development and added it into the coding. And so that gives this really robust experience to our users that they don't have to figure out how to operate. And as this continues to evolve, ALTR's product suite is going to evolve, our product suite continues to evolve. Our customers just worry about getting the end benefit and not worrying about trying to keep pace with the technology. And while they're learning, not having things at risk.
Right. It makes sense, and I would say that in a lot of ways, it's a better way of doing things. It's security as forethought, right? It's considering a security at the time of you building the application that's going to collect and produce data assets, and it's going to access those data assets. So, when security is embedded that way inside of software, it understands the context of that application, what the application's doing, what the data is. In a lot of, what we've seen is a lot of data security products that are out there that are applied, after the fact, or that aren't embedded. Perhaps they're inside of an appliance on the network, or they're provided by some service that isn't closely integrated with the application. That when you're already an afterthought at that point, it's very difficult and expensive to maintain security that's seamless, and that really protects data. And I don't know, when we look out as a security software provider, when we look out across the landscape of the breaches that you described, we see a lot of them happening because of those themes, because security was implemented as an afterthought, not as a forethought. And so, that it makes sense, the evolution. I think we've evolved it to a better model, honestly, and it's cool to see you guys leading the charge there. So let's talk about a little bit about the future. What do you see happening in, you've seen that evolution over 10 to 15 years, right? Past 10 to 15 years. What do you see happening in the software industry in the future, from a security and privacy perspective? Where does it go?
Well, and this goes back to how does security help the innovation cycle and not be viewed as a gate or friction to that process. We have to deliver, our customers need to deliver more features, more services, more things to their end users. And, we're a mission-driven company. We believe that the best way to help our local communities is to help those financial institutions that are within that local community whose missions are to reinvest back into those communities. And so we need to help them do battle with some of the biggest companies in the world. If you think about the large 4 banks in this country, they have a lot of resource to bring to bear. So we've got to help them innovate faster. And when I think about, as we start leaning on other partners, as we start connecting our solutions together, there are going to be third parties to us, fourth parties to my customers. As they start using, there'll be probably third parties to them. Data is flowing between us all. And so how do I make sure, and how do we leverage an ALTR across this chain to protect this data wherever it is. And I think that's the solution that we get into, where I'm not dependent. My weakest link isn't somebody 3 levels down from me over in a third party that happens to have access to the data, that does a very small service for us, that isn't as strong in their security posture, and then they're breached. And then that breach exposes all this data that we've been trying to take care of. So I think how we as an ecosystem evolve together, leveraging more and more services together, but making security as the foundational part of that service, that's where it's got to go, right? We can't, to your point, we can't just keep bolting it on as a step of going to production.
Yeah, that makes sense. You know, a lot of times you hear out there people talking about how the network perimeter has disappeared, right, with the cloud. It's interesting the way I'm hearing, like what I'm hearing you say is, in a lot of ways, the technological perimeter is disappearing as well, where you know, there's leveraging, you know, developers and software companies are leveraging open source libraries. There's a huge number of projects out there that are almost as microservices getting leveraged into to build software, and each one of them represents a potential entry point, right, for you know, if that service or that project is less secure. I hear you saying that we're going to just keep going that way, or we're going to keep integrating additional services from third parties as people that build software. Is that kind of where you're going with that?
Though we're a software development company and almost half the company is a developer here, I need 4 times that amount, right? And so the way we get there is that we bolt interesting ideas from other companies together, and the solution is a combination of not just services I wrote, but API calls and connections to all these other parties to deliver a package to our customer. And that's how I get there faster. I have an ecosystem that's moving at the same rate in all their specialized areas as fast as we can go. And together, we're growing this great solution that I'm not having to hire and build all by myself. And so if you think about how that's going to work together, and at the end of the day, you know, the end user benefits from just the increased functionality and the rate of that innovation. And it's not just all on my lap to develop it. I'm connecting best of breed. I'm connecting great solutions together.
Right, and you can do that with less worry because you have assurance you've got your back covered from a data security and governance perspective.
Exactly.
That makes sense. Okay, well, Lou, appreciate all of that those answers and the additional context. Thank you. We have, I think, 7 or 8 minutes left. I want to turn it back over to the Finovate moderator, David, to kind of reach out and see if we have any questions from the audience that for myself or for Lou. Sound good?
Excellent, and thanks, Doug, for handing it, and thanks for leading off with sort of a little bit of our question and answer there to kind of give us a little bit more in-depth on some of the very interesting points that Lou brought up. We do have a handful of questions that have come through in the Q&A, and I do want to remind all of those of you who are listening to go ahead and, if you've got a question for us, to go ahead and submit it to us using that Ask a Question button. As I mentioned, we have a few that we'll go ahead and get started with, but we certainly do have time. If you've got a question for either for Doug or for Lou or for both, certainly feel free to go ahead and send that to us, and we'll get to that in turn. The first question that I wanted to take a look at, just sort of an informational one for Doug, actually, and it's looking at ALTR, its business more broadly, and just checking, does ALTR only work with FinTech companies? And maybe if I could add to that, to the extent that ALTR works with other companies, how is that experience different at all between the different companies you work with in terms of trying to get them up to speed in this regard?
Thanks for that question. I appreciate it. Yes, we work with a lot of financial services technology companies and financial institutions themselves to protect applications, but also in other industries. I think Lou mentioned as you went through kind of the risk profile for data security, that healthcare is a big place for, is very kind of targeted by the community trying to steal data or expose private data. And so we work with healthcare. We have some customers there. And then pretty broadly across other industries. I mean, we have a couple of customers that are using us to protect intellectual property from theft, not just consumer information. So everybody's generating valuable data. It seems almost without exception. If you have a company, you have software, you have data, and in a lot of cases, that data is something that somebody else would love to get their hands on. And so we're working with a pretty broad set of customers, but probably our biggest number of customers are in banking today.
Mm-hmm. That's interesting. And I'm just curious, just as a touch on that, is there anything in the experience of working with different companies that's what would be the best way of putting it, sort of cross-educational, anything that you're learning from working with, for example, the health services companies that's informing the work with you with FinTech or vice versa?
Yes, each industry has its own regulations. So there's a different regulatory environment, compliance environment. Also, while there's some similarities, the industries structurally are different, right? The way data flows and is leveraged by different parties in each industry is interesting and unique. And so we've learned a lot about the different industries in terms of where the common risks are. What are the patterns? What are the solutions that ALTR gets leveraged most often into? Whether it's sharing data to provide care in healthcare, whether it's data warehousing and data integration in financial institutions. There's some pretty common threads. Everybody's trying to get to the cloud and make the cloud safe, which is how we get leveraged pretty commonly. But you know, it is a little different in every industry, and it's been really fun to learn about that and adapt to it.
Sure. Very, very interesting stuff. It's definitely the world that all of us on the enterprise are living in for sure. I want to touch on another point, and this actually came up a little bit in toward the tail end of the discussion about the wealth of developers and the amount of developers who are brought to task to take care of this. And this is a question I guess was mostly directed to Lou, but Doug, certainly if you wanted to weigh in. And this is asking how this approach that you described today in today's webinar, how is it different from the perspective of the developer from what approach they might have tried previously?
Sure, yeah, great question. You know, we used to be in a world where a developer would create an application, it would go to QA, it would get tested, and then it would be handed off to production. And then in production, I would add things like monitoring, I'd add resiliency with clustering and load balancing, I'd add things like security to it. And then I would negotiate with the customer on the SLA and contract, right? And so that developer who wrote that piece of software didn't really get much exposure to what the customer expectation was and really some of the operational concerns I had to do to operate at scale. You know, today, as we've refactored our application to microservices, we've moved into containers, and we have this kind of DevOps, DevSecOps model where we've shifted security and operation concerns more to the left. So we sit closer to development, and we catch the problems iterating much sooner. We have non-functional requirements of performance and security and those type of things pressure tested on that code a lot sooner in the cycle, long before it ever gets to production. By the time I get it, it's a container, I build and deploy, and it's a brick out in production. So what that means, though, is we've moved, the roles have shifted a lot. So instead of me adding all this stuff to the application in production, the developer now has to create a software that is resilient, deals with clustering, has health checks embedded, and is responsible to write security as part of that piece. So if you think about the shift, we've put a lot of onus on the developers to learn and operate with all these production concerns as they write code. I think when you think about now that we can protect that data as a foundational element within the product offering, so that is there regardless of how we operate the business, whatever vulnerabilities found in the code, whatever open source thing shows up next week that we don't even know about. I think it's allowed us to move the security responsibilities to a wider audience, so it's not just operations, but includes development, and yet the data is protected. So as you kind of spread it out and you make it new for people, I think you open yourself to risk, but that risk is mitigated because that data is all protected.
Right, right. Very interesting. And I love the idea, the point that you brought about including development earlier in the security process. That's something I've heard here and there from people talking about this topic a little bit, and to hear that sort of something else that you've talked about really helps me understand that shift that's taking place on the developer side of things. One question I had before I go on, we've got a question that just came in talking about sort of projecting into the future a little bit with adoption of some of these technologies. And it's one thing that just sort of came up as I listened to both of you talk, and it just brings to mind the questions of leadership and culture. And I'm just curious what sort of things are required, or maybe how important are those two issues when it comes to making some of these changes, which I could see from certain perspectives with certain companies, with certain teams, could be fairly dramatic changes from the way they're doing things. How important is the culture of the company and the leadership of the company in terms of making all of this work?
Well, if you don't mind, Doug, I'll go first and then pass it back to you. But for us, if you think about if it's viewed as being added on, so if security is added on to the process, then it's always inconvenient. It's always kind of what's forgotten at the end. It's like audits, right? If you have to worry about the auditor showing up and you have to 2 weeks of scramble to get everything in place, it's a burden. But if you change your daily processes to operate in a manner that creates the evidence and is auditable at any time, so the auditors show up any day and you're ready to go because the way you operate the business is auditable, then you're not as concerned about that. And I think I look at security that way as well. So if we can move security up, and it's not something I'm trying to bolt to it, it's not some sort of gate test that they have to pass or I kick it back, and it's this integrated way of operating so that the DevSecOps team sits right in development. I mean, when you walk around our Q2, you can't tell who's doing what because we're all sitting together. And the outcomes, because we have the shared outcome. And so every one of us has an expertise we bring to the pile. But it's not like it has to run a mile and then we put all this testing on it to see if it passes or fails. We do that together as part of the scrums, as part of the sprints, as part of just the process of developing software. So I think we've been able to decouple it as this extra thing added to everything and kind of kludged on to now it's just integrated as how we do things. And then that allows the teams to kind of leverage each other's, kind of best skills to create better outcomes.
Excellent.
Yeah, and the only thing I would add to that is that Lou, that was very well put. The only thing I'd add to that is that we are very philosophically aligned with that, and it's really, when we talk about our product as being programmable, that's what we mean, is that you can integrate this. It's built to be integrated into the software process, and that it's built for this future where that responsibility moves to the left, and it becomes cultural, it becomes embedded, and that's our own corporate philosophy as well. I think we broke some sort of speed record for PCI compliance. I think we achieved it in 36 days, and that's because we didn't have to re-engineer anything. When the compliance folks came in, the audit wasn't an inconvenience. It was just a matter of documenting what we were already doing, and I think that's the kind of getting ahead of it that philosophically we're trying to bring to our products, and we found a partner in Q2 that is very, very much aligned with that approach.
Right. Excellent. Very good. Thank you for both of you for your answers on that question in particular. And I just want to let our audience know that we're coming near the top of the hour, but there is still time if you do have a question or two that you wanted to have either Lou or Doug respond to. There's still time for that. I've got one here in particular that just came through that I wanted to to share with you guys. This was, thanked you for an awesome webinar. I should mention that. He also asked that in 3 years, Lou, you mentioned that 10% of businesses will be doing something with blockchain, and the question was really sort of looking to explore that a little bit further. Do you see this as an evolution that cybersecurity companies are going to be more likely to pursue? Sort of what does the landscape of that 10% look like to you?
You know, that's a great question. I think the success of ALTR and some of the wins they're getting in the different market spaces are going to cause people to think that, hey, this use case of how it can actually transform the security posture is this use case that's real and it's now and it's something I can do today. If you think about where it was just a couple of years ago and this kind of public ledger system, well, there's use cases for that, and I think there's lots of companies that are doing some interesting stuff with tracking food movement, tracking currency movement, tracking finite resources that are kind of like Bitcoin. They're finite in what they are, and whether that's a piece of food or that's a mineral or that's genes, and tracking the movement from A to B to C, and in a way that is immutable, so it can't be compromised. So there's lots of use cases where that is coming up. The challenge with that, I think, is always if you're going to do something that is going to be industry changing, you need adoption by the big players to use a joint ledger and work together. And a lot of times they're competitors with one another, but they've got to agree that this is the best thing for the industry. It will take a lot of cost out. It creates a lot of trust in the industry, and how to do that. So I think the public ledger thing is a interesting angle. I don't have the foresight of where that's all going to fit. I think this security posture piece that ALTR brings to the table, man, that solved several problems for me right out of the gate, and so that was an easy one to adopt. What other companies are going to do? Well, should any time data is stored, should it be in this kind of format? And I think ALTR has a clear advantage of time ahead of them, so they're already out in the market, they're already doing stuff. So you'd have to question whether it makes sense to reinvent your own version of this, or just work with ALTR and adopt their piece under your foundational technology. I think it's very complementary, not a replacement. So as I'm coming up with tooling and I'm coming up with stuff to do, I've got data I need to secure. Well, rather than me reinvent my own blockchain underneath it, partner with ALTR and just get that piece off my table, leverage their expertise and their best-of-class solution, and bolt them together. So I hope what happens is we don't have 500 choices of blockchain in 3 years to do the same thing, and that we're creating interesting ways and collecting more data and securing it, not 500 different ways. So that's where I hope it goes, versus me having to deal with. Last thing I want to deal with is 5 different blockchain vendors.
Sure, absolutely.
Yeah, and I would say that the key thing, from my perspective, the key thing that Lou said in that statement was that this solved specific problems for him today and for him. And I think that the disadvantage that blockchain suffers from today as a technology is the first use case for it was this massive global network of people and counterparties in cryptocurrency. And so what you get now is you get people conflating blockchain technology with the networking of lots of different parties to solve trust problems. Well, the thing that you can do with blockchain technology that really aligns with how people adopt technology typically is you can solve small problems first. And by small, I don't mean insignificant. I mean trust problems between individuals. So companies today in data security have trust problems inside their own company. And they have trust problems when they integrate third-party technologies. They have trust problems when they bring contractors on. When you can use blockchain to solve those trust problems that are purchasable by a single company, that's powerful. And then they get familiar with the value of that technology, and then you start to network those things together. So maybe companies do get on a common blockchain and share data that way, but they're not going to start there. So you solve small problems first, you get to big problems. That's our philosophy. And we look forward to a future where, this technology enables us to promote trust, digital trust, inside of companies, between nations, but we're going to start small.
Excellent.
Right on.
Yeah, I agree. That was a fantastic summary of the issue for both of you, and something for us to look forward to in terms of the fragmentation of this technology and whether or not it does break into a lot of different vendors, or whether or not there is that consolidation that you mentioned that you were hoping for. We're going to be wrapping up. We're coming near the top of the hour. I don't see any more questions coming in, so I don't think we're leaving anybody on the outs. I should remind you that this presentation will be available a few days after we're done on the Finovate blog for folks who'd like to review and catch up on some of the points that they may have missed or they really wanted to sort of have their memories refreshed on. So again, you'll be able to check back on the Finovate blog for more of that. Also wanted to remind you that both Lou and Doug are going to be at Finovate Fall next month in New York City in Manhattan. That's the September 23rd through the 25th. They'll be on stage. They'll have a booth. So if you were a part of the presentation today, you're going to be headed up to Finovate Fall. It's a great opportunity to hear from them a little bit more on the work they're doing, as well as just stop by the booth, say hi, and maybe have a more in-depth conversation or two, again, on these small, big problems, as we said, that really have some new, innovative, and very powerful solutions. So again, you can check out both Lou and Doug at Finovate Fall next month in New York City. Information about Finovate Fall is on the website. So that's about all the time we have for today, I'm afraid. I want to thank our guests, Lou from Q2 and Doug from ALTR, for a very thought-provoking conversation. I know whenever security comes up, it's one of my favorite conversations to be listening into. It's certainly something that's in every day, in every way, something we really need to be concerned about. As I mentioned, the recording of this conversation will be available on the Finovate blog in the coming days, so stay tuned for that. So on behalf of Finovate Group, on behalf of Lou and Doug, thank you for joining us very much, and we look forward to seeing you next time. Have a great day.
Thank you.
Thank you.